Hi everyone, this is Rob Roy and welcome to the LA Wave Options US Market Update. Well, the market is currently dealing with what I'm calling a double dichotomy. I'll show you what I mean from a technical standpoint in a minute when we look at the charts, but think about this with me from a fundamental standpoint. We have some fund managers out there that have not been believers in the market. So we're nearing the end of the year, we've got the market at new all-time highs, and they're underperforming the market. That's not good when it comes to the end of the year, when their shareholders are looking at their statements and they're saying that, hey, we underperformed the market here. How did you not at least perform what the market did? So they begin to chase the market. In other words, they come in and buy, hoping to push the market higher so that their performance can catch up to where the market is. On the other hand, we have fund managers that have been involved in the market and they've got nice gains. They want to book those gains because until you actually sell something, it's an unrealized gain, right? It doesn't become realized till you actually make the sale. So they look to start taking profits. So which one's going to win out? I don't know. It's going to be interesting. Let's see if the charts can help us out. So in the intro, we talked about the haves and the have-nots as far as fund managers and their performance with the market. Let's take a look at the chart and see if it can help us as to where the market goes from here. And as you're going to see, not exactly. We look at this, and I can remind you, we've talked about this for quite a while now, that we've had this zigzag pattern in the market. So we had this A impulse wave here, and then we had the B corrective move right down to the 61.8% retracement level. You can go back and look at some of the past recordings if you haven't been following with us for quite a while, and see what we talked about way back when this correction first happened. So there was the A, the B wave correction, and now looking for the C wave extension to follow along with that. You can see that the market is awfully close to hitting that level, and we're running into a little bit of resistance right there around that 313 level that we've been talking about for months as the endpoint for this initial C wave extension. So the question becomes, and from a technical standpoint, it's a bit up in the air, where do we go from here? Well, from an Elliott wave Fibonacci standpoint, one of two things can occur. We could be done. It satisfied the zigzag. It basically did what it was supposed to. It ran to 100% extension. That's what's supposed to happen after 61.8% correction. So it satisfied the rules for the corrective zigzag. Corrective meaning a zigzag is a corrective pattern within Elliott wave. It moved to the upside. And I know a lot of people, when they hear the word corrective, they think downside. This is an upside move, obviously, but a zigzag is known as a corrective pattern, flat zigzags and triangles within Elliott wave. Now, we could have what's known as an extended C wave, where we go to the next fib level. So we're here at the 100%. That would be a move up to 161.8%. But what usually happens when you have an extended C wave is that you test the previous fib level first and then move to the next level. It doesn't always work that way, but quite often it does, which means that we might be in for a bit of a correction before we move higher. And look at this point where the 61.8% fib, this was an extension, so it was the previous extended level. Look where that happens to be. Right there at a point that was resistance back in July. It was resistance again in September. We broke above it here in October. Wouldn't be out of the realm of possibility at all to come back to that level and find support there and bounce back to the upside. That's one scenario. The other scenario is we're just flat out done. That's it. We've satisfied the upward zigzag pattern and we're going to come back down. And what normally happens when you complete a zigzag is you retrace the previous impulse move, which would be a move back down here to the zero line, which would retrace the entire C wave extension. So those are the two possibilities from an Elliott wave standpoint. Let's see if some of the other charts that we've been looking at can give us some insight as to which may win out. Now look at this. This is interesting. TBT. You have rates coming down. That's not what we've been wanting over the past week, right? We've talked about this before, that when rates are coming down as far as they are, it's kind of giving credence to that potential recession on the horizon. Not a good sign for the economy. Normally the economy is not doing well when rates are dropping, but look at the chart. We're right here at a 50% correction level. If we go back just a week, the chart was a different chart. We were looking at a wave 4 moving to the upside, and what I was saying is that I would like to see that wave 4 move up towards a 38.2% corrective level, because this 24% is the 23.6% fib level, and this is exactly why I don't look at that level as a corrective level within Elliott wave Fibonacci rules. And that comes from Elliott himself. He's a big believer in Fibonacci ratios, but wasn't a big believer in the 23.6% level. And boom. Lo and behold, we relabel, and that means that we could have some really good support here at this wave 4 level, which could propel us up in rates, which would be a positive for the market. So rates moving up, that means, okay, things are better, the economy's doing better than maybe some think, and we could have some support for an upside move from that standpoint. Looking at the VIX, the VIX is down here near the lows around 12, where we've been bottoming out for the past year or so. I've shown you this numerous times. We do have lows that went down as far as 9, going back to 2017 and early 2018. But since then, this 12 level, as you can see, has been the low, which means that from here, normally what's happened is volatility has increased. Well, that ties in with the market moving down a bit, even if it's only the move down to the 61.8% level to find support there for that potential move back to 161.8. So the VIX is saying caution here as far as breaking through this 100% level and just running up to the 161.8 unabated. Let's look at the dollar. Now the dollar has a wave 4 correction here at the 61.8% fib level, and we bottomed there, so we tested that level. Good solid bottom right there at an area that happened to be support going back to July and August as well. And now we're moving to the upside, and look what happened on Friday. The dollar had a pretty good move to the upside on Friday. So it's okay if the dollar stays in this trading range, but if we do have a big move in the dollar back to the upside, up towards this wave 5 high, that's not going to be very supportive of the market going higher, because the market doesn't want the dollar to go significantly higher. We have way too many international companies that the exchange rate is just detrimental to earnings and the bottom line. And we haven't even talked about the U.S.-China trade deal, so I'm just going to leave that out for this one, because that's a subject that almost seems to be every single day in the markets. I'm sure you're tired of hearing about it. I'm tired of talking about it. So let's just talk about where we are now. And the thing is, I don't know. This is the point where we're at a point of indecision. You let the charts tell you where you're going to go before you make your decisions. So what have we done for our subscribers at Elliott Wave Options? A strangle. One of our proprietary strangles where we take advantage of a market move to the upside or the downside. It makes sense, doesn't it? Because I've shown you scenarios where the market could go either direction. We don't really know. We don't have a good grasp of where we're going to go. So let's cover both sides. Makes sense, right? If you like this, please give us a like. Hit that like button or even subscribe. I won't be talking to you again unless something really major happens before the Thanksgiving holiday. So I'd like to wish all of our viewers a very happy Thanksgiving. Take care, everybody.